Telesystems, a mobile operator in Russia, and its parent company Sistema. So the background is that last year at around December, Sistema was ordered to pay $1.7 billion, which is 100 billion Russian rubles, to Rosneft because of whatever lawsuit they had. So that added a lot of debt to Sistema's balance sheet. If you look at their last year's operating results, you can see that they had a huge expense item of 100 million to their balance sheet, which turned a what would have been a profit to a gigantic loss of $50 billion. And how did they pay for that? So essentially what happened was in Q1, you can see that in terms of you can look at cash flow, right? So they paid $80 billion. Not sure if they had to pay the rest, but anyways, they paid $80 billion and they raised 86 billion, no, sorry, dollars, rubles. They then raised 86 billion rubles in debt in order to cover for that. And so what the rest is then covered by this income, which is dividend plus share buyback. So MTS was buying back shares from Sistema, basically. So that is potentially, it could be self-dealing, but I haven't checked the price at which they did that. If the price is the market price, then there isn't really anything fishy here. Okay, so and if you look at their liabilities, they had $80 billion, 80 billion rubles in settlement agreement, and that's a debt. And now everything is mostly in Russian debt. Right? So it went from 90 billion to 180 billion. So that is the background. Now, I looked at the incomes from all its subsidiaries, because Sistema has a lot of subsidiaries. But if you look at their subsidiaries, majority of their profit comes from mobile telesystems, from MTS. That's like 8 billion, 7 billion rubles. And just put that into perspective, they made 50 billion in 2016. This is 7 billion in a quarter. So if you multiply that by 4, it's like 30 billion ish. And then the rest of their subsidiaries might have contributed the rest. So 2017, let's look at this. So if you look at their, let's see, their profits, 2016 was 48 billion. So if you look at here, in the Sistema's one, this is 46. So basically the rest of their subsidiaries are currently losing money. MTS is the only thing that they have. MTS alone has more income than the rest, and you can see in here you have to take out the non-controlling interest, which is like the public portion of MTS's equities and whatnot. So this company is not nearly as profitable as MTS, but it has controlling shares. So when Sistema is in a huge debt, I thought the logical thing to do is for them to milk its subsidiaries by making it issuing more dividends. And maybe it would issue so much more dividend that it forces MTS to take more debt in order to pay the dividend. So then I started looking at MTS's cash flow, and you can see that for last year, obviously they weren't able to change anything. For last year, their operating cash flow was basically like triple, almost triple the profit. But then you also have fairly high investing cash flow outflows, and at the same time, overall they paid quite a bit of dividend, but not insanely much compared to the previous years. And if you look at the MTS Q1 expected dividend payout, again, is 52 billion rubles. So it looks like they're not actually milking MTS. So that was something that I wasn't expecting. And the other thing was I thought they would try to lever up MTS to pay for the debt and then at the same time cut back capital expenditure on MTS in order to milk it for just a couple of years to pay down the debt. Now, that did not happen either, because in their Q1 report for MTS and also in Sistema, both of them. This is actually MTS. This is Sistemas. So MTS is one. Here we go. It says the capital expenditure would drastically increase because they need to comply with anti-terror laws in Russia. So that would vastly increase the operating cost of all the telco companies in Russia, because now you have to store things for like a certain number of time, a certain amount of time, all the user traffic, and then they need to keep investing in LTE and then 5G and all that. So lots of capex. And 160 billion is quite high. That basically eats up the entire, if you look at their numbers, it will eat up the entire operating cash flow, which you can find here. So, but it shouldn't it shouldn't really make it take too much more debt, as long as they don't then pay out dividends. But again, they're expecting to pay out dividends, so we can assume that MTS will take up about 50 billion rubles in debt. So that's, in a way, Sistema is still milking MTS, right? Because normally, given this amount of capex, maybe they should just drop their dividends for a year. But they didn't do that in 2015, so they probably just don't do that in 2018 either. And the other thing that we should pay attention to is that this regulation applies to all telco operators in Russia, which means the cost for all of them is going to go up. So the price for the Russian consumers probably will go up. So their revenue will probably increase next year, quite a bit, in fact. Okay. So I was initially thinking, okay, maybe I should buy MTS as just a dividend milking machine, but it turns out it wasn't that good as a dividend milking machine, because if you look at dividends, it's crazy high. It says it paid out 143%, but that number, I'm not sure I buy it in. Typically, the seeking alpha is a bit BSing, but if you look at their full year, they made 56 billion rubles, and then they only paid out, I think somewhere here, 51 billion. Yeah, 52 billion. So I don't know how they reached their number of, crazy payout ratios. If you look at their dividend history, you can see that you would get maybe $1, around $1. So that is 1 divided by 7.71. So you're looking at about 13% dividend payout, which isn't bad. But again, two things: they're going to take up a bunch of debt in order to do that, and the debt is non-significant. The debt increase should be about the same as their profit for the next year. So that's a whole year worth of profit. And secondly, they have this, large capex that may drag down the result, and then who knows what their parent company Sistema will do to MTS. Maybe they will make them buy back even more shares in order to pay for the debt. We will never know. And if you look at the valuation, compare it against the past, it hasn't reached the lowest points yet, because back then it was like, during the Ukraine thing, this thing was like 3 PE and some just ridiculous PB. I think it was something like, well, PB is skewed because this thing buys back shares, so the PB is going to be pretty skewed. But you can see that at the moment we're like 3, and back in when it was cheapest, it was something like less than 2. Same with cash flow, double the price, and same with PS, double the price, and EV/EBITDA, same thing, double that, and EV sales is almost double. So at the moment, I think even though the dividend looks extremely appealing, I'm not sure it's a good time to go in. But if EV/EBIT drops down to like 4, which is then at that point, you essentially go back to the 2015 level, or even 5. At that point, EV/EBIT, and at that point, it will be a much better buy if it ever gets there. And just one more point. So the difference between EV/EBIT and EV/EBITDA for a telco, I think you should always take EV/EBIT, because depreciation amortization is a very real cost for a telco, because they are the stereotypical like heavy asset. Like they're very heavy in asset in capital. It's a capital intensive industry, so you should always include depreciation amortization when you try to value the company. Okay, I know I did not tell you, oh, this is a great investment, let's go there, but yeah, that's what I found today. I was initially coming in here expecting MBT to be super hammered because of their problems in Sistema, but apparently that did not happen. I guess I'll see you next time.